Zachary, you are Head of Real Estate Research and Strategy Europe at UBS Asset Management. Thank you for joining us on BiTV.
Pleasure.
The pandemic has unevenly affected the various asset classes and European real estate markets. With the worst seemingly behind us, what are the main challenges that real estate investors should still expect?
I think, to be honest, the main challenge is what you've already stated, that the pandemic has disproportionately affected the different sectors to such a degree that capital has essentially targeted very specific sectors in very specific markets. And that's made it very difficult from a research point of view to find kind of macro trends or top-down picks and generate alpha and really drive returns. So you think about the sectors that have done well in the pandemic, it's logistics, it's prime offices, and it's life sciences. These are
Mm.
obviously very crowded markets. Loads of people want to buy into them. There's not that much stock. And of course, because of that, yields are extremely low. So I really think the biggest challenge for investors going forward is how to generate returns.
Mm.
And over the past 5, 6, 7 years, real estate markets have been on a pretty phenomenal bull run because it's been the perfect situation of pretty strong rental growth because there's been limited supply. But of course, most importantly, interest rates have kept coming down and down and down.
Mm.
Now, the big question is, particularly with inflation rising, are we at a turning point in the interest rate environment? And even though we think inflation will prove transitionary, our view is that the bull run fueled by lower and lower interest rates is coming to an end. So even if interest rates now just stabilize, perhaps move out slightly, property yields cannot continue to compress. They're
Mm.
too low already. So that means that the model that you could have done before of just buying a logistics asset or an office asset, regearing a lease, letting rental growth come through, the market would have supported returns. That's not going to happen anymore. So the biggest challenge for investors is how to generate returns from this environment.
Mm.
Our view is that investors and managers are going to have to work much, much harder to create those returns. And essentially, what we think they need to do is really add value to any of their investments. So if we're looking at the office market now, we think the best opportunities are to buy lower quality assets in good locations, and then obviously really add value to the office space. Repurpose it and bring it up to speed with the kind of space that we know occupiers are going to need post COVID. Similar with the logistics market, we know there's strong occupational demand. The stabilized assets are too expensive. We have to look more down the development route to continue to generate those returns.
Okay, and you already started to answer my next question. Thank you very much. In times of crisis recovery, opportunities also arise, as you said, for investors. Which one can they target in European property markets? Do you see maybe new opportunities appearing on the market following the crisis and in this time of recovery?
Yeah, I mean, the cyclical play at the moment is probably the retail sector. That's obviously the only sector which is unfashionable or a bit unloved. And so that is certainly something that we're monitoring to see, as and when values hit a trough, and is there potentially room for recovery. We're already seeing that in the UK market in the retail warehouse space. It's actually had really phenomenal capital growth during this year, almost as strong as the industrial sector. But sort of outside the kind of cyclical play that we'd be looking to retail warehouses, we really think with where returns are, you have to be looking at the growth sectors. We know life sciences has become a very popular sector and is obviously very crowded, particularly in the UK. But we are finding that actually, locations outside of the key hubs of Oxford, Cambridge, and London, but sort of situated close by, actually still offer really good fundamentals for kind of niche research, which is happening, and there is literally no supply in these markets. So developing out real estate that can support the growth and the venture capital which is going into those companies is a good strategy. And I think in Europe, we haven't yet seen the same weight of capital go into the market. We would like to explore is, thinking, are there sort of perhaps slightly smaller, less heard of markets in Europe, but with a really strong university and really strong research and development that are having the same trends as we've seen in the US, we're seeing in the UK, of those life science companies growing and expanding. And because of that lack of supply, we have a very strong outlook on the rental growth and the income side. I mentioned that we think value add with offices is probably the most sensible way forward. And as I said, with logistics, just because the entry yields are so low for stabilized assets, we do think you have to go down the speculative route and really have conviction in the occupier market to deliver that space. Living markets, again, also very popular, also very expensive. Again, we'd probably have to be looking down the development route. I think student accommodation is an interesting one. In the UK, it's already highly established. I think in Europe, it is going to come online increasingly, and that's probably a niche sector with more growth that we see going forward.
Okay, thank you. And Businessimo is a French media. I have to ask, among its European counterparts, how do you see French commercial real estate market faring going forward?
Yeah, I mean, unfortunately, France is a core eurozone market. So, particularly with Paris, prime office yields are down at sort of 2.5, 2.6%.
Yes.
And it's very difficult to generate a case for that. But Paris is, along with London, one of the few globally sized megacities in Europe, and we think with that does bring opportunities. We like long-term investments that focus on new infrastructure projects, and of course the Grand Paris is the biggest of them, and of course the Olympics coming in 2024. So when we look at the Paris market, we'll be very much looking at where are these new business or living hubs going to emerge, and taking a much longer term view on those locations, rather than buying into the kind of the super expensive core prime city markets as well. And then in terms of sort of the rest of the market, again, Lyon and the other major regional cities are also quite expensive in a European context. But as I mentioned in the previous section, we do think there are interesting opportunities in these sort of growth technology locations. In the Sophia Anaphilos Park in Nice would be an example of that. And that's the kind of route we would be looking for France, because it does obviously have very strong credentials, particularly in the technology research space. Markets like Toulouse as well, with the Airbus plant there. Those are the kind of things that we see. A bit more, a bit of a higher entry yield, and a very positive outlook on the strength of occupier demand. And of course, the thing that we like about these locations is when they're very research led. Often, the people doing that work have to go into that location to do the work.
Yes.
Either collaborate with other team members or project members, or because the technology or the research facilities are in that location. So when we think about working from home and some of the challenges that pose into the traditional office sector, we think these kind of growth tech research hubs are really interesting and quite defensive against these structural shifts.
Interesting. Well, thank you very much for this insight, and for your time, and thank you all for joining us. See you soon on BiTV.